Hey guys, what is up? It's Dusty here and welcome back to another crypto livestream. I hope everything's okay. It's the first livestream on my completely new setup. Again, got a different computer, different big screen, different everything, different camera. So I'm not sure if everything is working all right, but I hope so. And today we have a really crazy update if you were to ask me. I think we have you guys can already see, I already see you guys typing it in. We have some Mt. Gox news, we have some Ethereum, and to be honest with you, the whole Mt. Gox situation, I honestly don't think there's anything too crazy new, but it's a warning to everybody because, well, the big guys know all of this. Then again, I think we go a little bit deeper. I have like 20 articles open or so for today's video. Let me just quickly give you guys a little insight into what we have. Let me quickly go to the different mode for my camera so it lags less. So, have a little bit about Bitcoin entering a bloodbath. It's just the start. It's just a little introduction about what's happening in the crypto space right freaking now. Because, as you guys probably know, it's a pretty crazy period, you know? Bitcoin has dumped significantly over the last couple of days, and I think we have some good explanations as to why. In that same sense, we're going to have to talk a little bit about the stock market, but it's just a little bit, all right? Then we have our big theory of a very interesting coincidence piece that I personally don't think is coincidence. So we have to talk about that. Then the fact that Ethereum is up. The whole Ethereum situation is so crazy. And you guys will enjoy this, I think. Buy the rumor, sell the news is what I have to put into people's heads. You have to understand. Buy the rumor, sell the news is one of the most important key lines in crypto, in Forex, crypto, and everything. Buy the rumor, sell the news. And by the way, if you're watching the stream right now, let me know in the chat box where you're watching this from. I'm already seeing a couple of people that I recognize from just always coming by saying hi. So, welcome back, guys. Welcome back. Yeah, then of course the Mt. Gox situation. As you guys probably already imagined, we have to talk about it. It's kind of a combination though. The Mt. Gox Ethereum merge is just two major events happening in crypto that are going to have some astronomical consequences for the prices and thus need to be covered. Let me also put this straight. There we go. There we go. Then we have a little bit about a top strategist at a $1.3 billion crypto fund who says Bitcoin can explode. A little bit about the SEC going pretty crazy over on Twitter. I'm going to put all the timestamps down below. I'm going to try to do that. Not sure if I'm going to be able to do that, but I'm trying to always put timestamps nowadays, you know? You guys have most likely noticed. A little bit about Coinbase's shares, why they're going up, and whether or not that's a good buy, and what Coinbase shares indicate for the rest of crypto. I think it's also important. The Binance US obtains a money transmitter license. Is that good? Is that bad? Is that the standard? We'll talk about it. Central Bank of Colombia studying the creation of crypto. And then, I'm not sure if we're going to get to this. I'll hint it briefly. Not sure if we're going to be able to get to it. I had some stuff regarding Meta and whether or not it was a failure, and some stuff regarding Cardano, as there's quite a long story that attaches to this. But again, I'm not 1,000% sure whether or not I'm going to be able to cover all this in the live stream, because maybe it might, what if it takes 7 hours? I don't have all the time in the world. So I'm going to try to get as far as we can, and we shall see. So let me try to put these things straight. You can see here over on the left just how many tabs I have open. You can see a little bit of a hint, right? Sorry, this is ridiculous. Of just how ridiculously many tabs I have. I think it's at 110 or so I have open right now. But it's good. All right, let's quickly see what you guys are saying, and then we'll start the stream and talk about everything. So we'll quickly see. Hi from Utah, Dusty. Hi from South Africa, says Natasa. That's a difficult name. Clever says hi from Utah. Andrew says from Cape Town, South Africa. We have Matthew from Canada. Shannon from Las Vegas, baby. Dwight from Holland, what's up? Danny from UK. Pellet from Denmark. I can actually show it to you guys what I'm reading right now. I'm trying to read it like this. We have Ugur from Australia. What's up, guys? What's up, guys? South Africa here from Werner. What's up, everybody? What's up, everybody? Dusty, I got to... Oh, I got a barber. Yeah, the beard, huh? And the hair. I've not gone for a little while, but it's okay. Doesn't matter too much. It's okay. It's okay. We got California. Okay. He doesn't like California, I guess. Yeah, what's up, guys? Northern Utah. Welcome, welcome, welcome to the chat, everybody. Let me put that back where it belongs, and let's get started. So, first most important thing by far. Why is things dumping in the crypto market? What's happening? Easy. Stock market is falling. It's as simple as ABC. Stock market fell from, or at least the S&P fell from 43.20 to 42.20. Is it a lot? Not necessarily. Is it a significant dump though? Yeah. And so when the S&P moved significantly, same thing for NASDAQ, Bitcoin fell. Now, the timing is a little bit off though, right? So what I mean with that is you would have expected that the stock market would have moved down. Okay, moved down from the 15th on forward. That Bitcoin would also move from the 15th on forward. But it kind of looked as if Bitcoin already turned around on like the 13th or so, somewhere in the middle of August here. Now, I'm honestly thinking of two main reasons why that could be the case for Bitcoin. And by the way, I'm going to try to do a stream from now on almost every single day, maybe even 2 a day or so. So if you guys appreciate that, let me know. And indeed, shout out to the mods here. Sean says, Dusty, whoever you hired to help is killing it. Shout out to the mods. Not sure exactly what you talked about in terms of help. But, all right? I guess all right. So, this article says Bitcoin enters Bloodbath at $21,000. Ethereum and others follow. Crypto market overview. Now, obviously, what you're going to see time and time again is some critical structures for Bitcoin. In this case here, oh, I thought I could make it bigger easily. In this case here, we saw a channel for Bitcoin which broke towards the downside and then it fell. I told you guys before as well that Bitcoin was hovering at the 200 weekly moving average, and the moment they broke down, it started to break down quite significantly. As we stated before though, guys, I'm still quite positive that the bear market is still here, even though I don't expect Bitcoin to hit a price lower than $17.5 thousand. This is what we put up a dozen times. I still honestly expect though that things could move further in the very, very short term, even though there's a couple of really bearish influxes. Now, one of these extremely bearish things is what you're seeing right here. But there's a coincidence that I shared over on Twitter that has got me thinking for a little while. It's got me thinking. Take a look at this. And you can say, I see somebody saying you're wrong. We'll see. Just take a look and decide for yourself. At the end of the day, I'm not your financial advisor. I'm just sharing whatever I found. So, 140,000 Bitcoin, you guys all know this, could potentially be dumped onto the market by the end of the month. Why? Well, there was a Mt. Gox hack or disappearance of between 700,000 and 850,000 Bitcoin. These potentially can be done by the end of August, as there was a rehabilitation program where about 130,000, 140,000 Bitcoin will be given back. Actually, I should say 140,000 Bitcoin worth will be given back to the people who lost it, and they can decide whether or not they want it in Bitcoin, USD, maybe even Yen or Bitcoin Cash. So you might think, well, but they might just hold Bitcoin. Maybe, but, and you might say, okay, but there's so many arguments against. Listen. The moment they get their Bitcoins back, they have held this from $500 per Bitcoin when they got lost. Right now, it's $21,000. That's 40x on their investment, 45x on their investment. They're pretty happy, I think, to sell it, just let go, because they have such a crazy return on their money. It goes further than that, though. They have the choice to get it in Bitcoin. Some of them might hold, some of them might sell. You got to understand, this is just part of their money, though. They are entitled to 4-ish, 5 maybe, times more the money than they're getting now. And the more money that gets found back, the more that they'll get. We don't know the exact date, but let's read on. So 140,000 Bitcoin could be dumped onto the market by the end of the month. This was an agreement made a long time ago, at least last year, about these guys getting the money back. Blackrock has entered the space and offers Bitcoin buying opportunities for institutional clients this same month. Is it coincidence? This is something that I think you guys should also give your comments on, right? Give your comments on this. BlackRock, the biggest asset managers in the world, through Coinbase, which by the way is why these stocks are up so much, through Coinbase, I guess is going through and trying to offer as many institutional clients the opportunity to buy crypto. Oh, I just broke one of these things. I'm not sure what it's called in English. How do you call these washing things? What do you call this? I only know the Dutch word for it, knijper. What's the English word for this thing? Peg? I've never heard that for this word. All right. But, okay, I'm learning something new every single day. What? A peg? Clothespin. A peg. Why are you guys so indecisive about it? Clothespin. Maybe that's like area-based. Just say what you call it and then what area of the world you live in. Because this is funny. Some people say clothes, clip, pin, and then peg. Interesting. Sorry, I'm getting distracted, guys. I'm so sorry why I keep doing this. I'm so bad at making live streams. If you think about it, it's really coincidental that, and I've said this before in a couple of videos, these guys, Blackrock, biggest asset manager in the world, they can pump and dump Bitcoin in any way, shape, or form they want to. They have all the power. Literally one of the most powerful companies in this world. If you have $10 trillion assets under management, you're pretty powerful. Now, the fact that they decided to hop onto the Bitcoin bandwagon exactly the month that another 140,000 Bitcoin can be dumped, that's pretty coincidental to me. Or maybe a little bit too coincidental, in the sense that these guys also know you want to start offering these opportunities at the lowest possible price. Why? Well, because that's the better you look. Or you want to basically get it, right? The way I'm thinking about it. You want to get it where there was a deeper dip and things are starting to... Please think about this. I've thought about this for too freaking long. I want to share this with you guys. Where would the most optimally placed announcement for Blackrock be? Think about it. You don't want the bottom of the bottom. Why? Because there's a massive amount of fear. You want the bottom of the bottom to be just in. And you want to grab it when things are looking good, but then at a low point in things looking good. So Blackrock right now is offering this exactly, well, let's say a week or two before a massive amount of Bitcoin can be dumped into the market. They allow for this opportunity. They allow for these major funds to say, okay, we might want to look at it. And then a couple weeks afterwards, prices drop by 20%. These guys get in and things start to move on from there. In my own opinion, they're creating one of the best opportunities for institutions to get into crypto right now, because the bottom of the bottom was in, at 17.5 thousand, for example. Bear market officially over because the bottom has been reached. They look for when it's starting to come back up. They wait for for example, a little stock market, bullish little period. How do you say it? Like relief rally a little bit when things were looking good here. Again, because this was the major bottom, let's say. Little relief rally. They start accepting it. They start adopting it. Things fall. Why? Well, because that would be the best for everybody. But yeah, this is just a little coincidence then again, because the stock market obviously is also falling right now. And even though BlackRock, for the most part, has a big part in this too, as again, their $10 trillion asset under management mostly fall under the stock market, obviously. I'm not sure they control everything to that degree, right? Just not sure. Now, why is the stock market falling? I described to you guys a couple of different reasons as to why it could be happening right now. One of those, obviously, is the tensions over with G20 and the whole Vietnam situation and whatnot. You can say the WAR still has some stuff to do with it. It's pretty hard to point. I've tried to look for some reasons as to why the stock market is falling, but it's kind of difficult to say exactly as of this point why it is. It could just be that people are talking about this really heavy fear of a recession coming along. A lot of major economists are saying, no, there's no recession. It doesn't feel like a recession. But at the end of the day, things are becoming so expensive, but they're actually getting better right now. It's such a strange situation. You guys understand. Now, let's move on. At the end of the day, right, there's people calling out this fear for crypto, and they're saying, no, it's going to go to 13,000. Prepare your ass and sell everything. I'm always saying, no, rather just buy. Even if it goes to the $13,000 price point that some of y'all mentioned. Yeah, it's the same thing like Martini guys said earlier, and the same thing that I often say on my channel. I'd literally rather buy at 23,000 and then not sell when it goes to, lower, I guess. But just rather buy at 23,000 than sell. What do I mean with that? So, a little while ago, back in 2017, 2018 or so, I bought the bottom for Cardano, for a lot of other cryptos. But at the time, I didn't know it was the bottom. But that's because I bought at a lot of different points and just kept on buying my way down lower. The thing is, though, sometimes you can say, okay, you know what? I'm going to grab these small short-term profits, or you can think about it in the long term. If you look back to 2017-18 now, if you bought at $3,500 per Bitcoin, or $3,700 or $4,000 per Bitcoin, relatively right now, all is cheap. Same thing, if you bought in 2011, if you bought at, let's say, $17 or $48 per Bitcoin, it's 3 times the price almost, right? But at the end of the day, nobody cares anymore about that. The same thing I kind of feel right now. If you look at Ethereum, for example, the amount of Ethereum addresses has doubled over the last 2 years. This asset class, this technology is rapidly increasing, all right? The adoption in this space is just going massively, massively, massively. And the only thing that's changing is the price a little bit. It's volatile, sure. But averaging it out, if you take a look at the logarithmic, for example, you'll see it just keeps going up over time. This is the price chart here on top of the, I guess, adoption chart. But just for a price perspective here, you can see this is for Ethereum. This is 2016 in the cents, right? In the 30s of cents. But generally speaking, the line is upwards and upwards and upwards and upwards. And that will continue on together to some degree with the total addresses and the adoption rate. But you got to be on your tippy toes. Right now, the Ethereum merge is quite close. And as I've said before, a lot of people are going for this buy the rumors, sell the news type of narrative. So how that works is, and this is a really important thing. I also described it in there's a book that's called The Intelligent Investor, I think by Benjamin Graham, I believe is his name. And there's a silver lining in there. And one of the most important pieces is that if there's a specific event, it's actually just the buy the rumor, sell the news described in better words. If there's a specific event that everybody's anticipating, the price can do well, most likely up to that point. And afterwards, it depends on what the event was. So let's say the Ethereum merge is a critical example. What's going to happen after the merge goes on? Well, it changes from proof of work to proof of stake, which is good and bad. We can see both sides of that. What happens before it, though? A change? Well, we have the beacon chain, the mainnet chain, they're coming together through the merge. But there's really nothing too much to be excited for because, well, 96% of Ethereum's progress is already completed anyway. I have it open, I think, here. You can see Ethereum merge progress, 96% complete. Developers confirm the final date to be September 15th. So what exactly then is in this myths that you should buy for? Or what exactly should you buy for anyway in terms of excitement? People are buying on the idea that the day that it happens, September 15th, things are going to go up. Why would they? Why would they not? Well, the logical reason that they expect things to go up is because there's a major event. The logical reason that this doesn't work, and it's a little fallacy. If everybody thinks the exact same thing, and everybody has the exact same info, then everybody is right now buying in anticipation of this event on September 15th. Who exactly is going to be left to buy it on September 15th if there's no chance of failure? If there was a chance of failure on September 15th, it's a coin flip. So people buy on the anticipation that, well, it might go through. And a lot of people are not buying because they are not sure if it will go through. That's the same thing that's happening with the Ripple lawsuit. The reason that it's a really bad example of buy the rumor, sell the news. It doesn't work that way. It's because a lot of people right now are not buying it because they think Ripple will lose. And we're buying it based on the idea that it will win. So it's not it's rumored that they're going to win, so we're going to buy it. So because it's always a chance still that they might lose. With Ethereum, the only reason that people are not buying is the chance that it might not proceed at that point. But the chance as it currently stands is rather small. It's rather significantly small. They're not going to go through with this merge because that would be such a critical hit to the crypto market that I don't think that's going to happen this time around. But you understand, everybody is buying now in anticipation of the same event. And so the gamble you might have is regarding the fees. One thing they're unsure about is whether or not the fees are going to change a lot. Some have said, no, it's going to become a lot cheaper. Some have said, no, it's going to change nothing at all. You can see here, the electricity is a certainty. But even the fees then, whether or not it changes, is that a real bullish thing? It is from a certain perspective, right? But there's so many negative sides to it. Okay, you don't have the proof of work anymore. All this mining equipment that was had before is all useless right now. Maybe the community will not accept it. Maybe they go riot. Maybe they go for a second new pivot. Basically, you already have a lot of solutions with the scale ups. You have the layer 2s. But I just mostly meant to point it in the direction of, well, since everybody's anticipating the exact same thing, there's not really much reason for September 15th to be a really bullish day for Ethereum. Except for the fact that, well, they got it. Wow, they got the merge. Yeah, but if everybody knew it was going to happen, then why would you buy on that day? Why not before it? Let's say now, right? Don't do this, but let's say, hypothetically speaking, I just put up a date. What happened in 2021, February 1st, I believe. I think it was last year. Let's say I say this. Everybody buy XRP on, pick a date. No, let's do Ethereum to make it easier. Everybody buy Ethereum on September 1st, 9 o'clock in the morning, because we're all going to pump it. It's the fun thing about it pumping up. The reason why it doesn't work is because people are going to try to cut it short, basically, by trying to buy as early as possible. They're going to buy it before the actual date. And the same thing happens with a merge like this. People will buy it before it actually happens, which is why it just doesn't really work properly. It's just a little secret to everybody. All right, let's see a couple of questions in here. If you guys have any questions, put them down, and I'm going to check them out every now and then. Fed is trying to slow down inflation, says Akil. They are, and they're doing a pretty good job at keeping those numbers low because the numbers are not real. So are they cutting down the inflation properly? It's definitely debatable. They're not doing the best of jobs, but that's also when you're not working, us, where you're not working with all the right numbers. They have the numbers in front of them, right? We don't. They can say whatever they want to say. It's kind of hard to measure the slowdown of inflation when you never know the actual inflation to begin with. So let's say that the actual inflation was 40%. They point it to be 10.8, right? For example. Well, then they could also say, wow, it went down to 10.5 because it went from 40% to 30%. And you might feel, yeah, indeed it changed. It's gotten better now. But in reality, it indeed is a big change, but still a number that's relatively a lot higher than they put it out to be. So they could say it doesn't feel like a recession, maybe because they're deliberately not getting us into a recession by just changing the numbers up. Something to think about. Let's see here. XRP for the future win. I'm a pretty big XRP holder. I've told you guys a couple of times before. I think this is one of the most bullish cryptocurrencies out there. And actually, later today, I'm going to make a video about my top 5 coins or so for right now, or at least top 5 coins that I'm pretty excited about right now. So if you guys are excited for that, make sure you check it out on the channel a little bit later. Also, guys, just a little thing. We have about 250 people watching right now. We've had 700 people tune into the stream. Can we get to 100 likes right now? If you could, press that like button. It would be greatly appreciated because it helps spread the video or live stream to multiple different people. And I should have... Oh, are we lagging? Some frames were lost. How could that be? I just upgraded my internet to the best internet possible that my provider had. I just got the best PC that I could find. How can I lose frames? Maybe it's YouTube. No, it's happened again. Uh-oh. Are we good? I'm seeing my... Okay, maybe it's my internet then. Uh-oh. Sorry, guys, if anything is happening. It's my first stream, all right? I'm not sure how to fix all these things just quite yet. If there's some lag, if there's something, I'm going back to the shop and beating somebody up, all right? But as of this point, I'm already streaming. I can't do anything, all right? Can't fix this problem. I'm sorry for that. All right? Sorry about that. We're good. So, little story, another one. Not perfect English, but it's good. A top strategist at $1.3 billion crypto fund says Bitcoin could explode over 2,200%. Here's his timeline. Do we care? No, because his words mean absolutely nothing. But let's just read it anyway, for fun's sake, The chief investment officer, CIO of crypto asset manager Bitwise Investments, is unveiling his massive price target for Bitcoin, despite the ongoing bear market. In a new Stansberry research interview, Bitwise executive Matt Kuogan says that Bitcoin could rally by over 2,300% from its current price of $21,000, as he believes Bitcoin will come close to gold's market cap of more than $11 trillion. I think it's perfectly rational to believe that Bitcoin could trade to $500,000 over time. The way I picked that number out of the hat is if Bitcoin held as much wealth as it held in gold, it will be about $500,000 a Bitcoin. Hogan says he sees Bitcoin's market cap ascending to greater heights as Bitcoin outperforms gold as a store of value asset. There's something to be said for that, sure, certainly. If you think out 5 or 10 years, could Bitcoin be as big as a store of value as gold? I think the answer is yes, and that leads to $500,000 a Bitcoin. Will we get there? I don't know, but I think that's certainly within the realm of possibility. The top investment strategist at Bitwise says that Bitcoin is currently in an appreciation phase, similar to what gold went through in the early 1970s, right after the government ended the gold standard, a monetary system where the US dollar was convertible into a fixed amount of gold. Quote, Bitcoin is the new digital gold. It's better than gold and everything gold tries to do. You can move it faster. It's harder to fake. Yeah. It's easier to store and it's harder to falsify. It is the new gold. If I'm right that people are going to think of Bitcoin long-term as a legitimate way to store wealth, it's going through that same appreciation phase as gold, and this is when you want to own stores of value. When the world is figuring out what they're valuable, when they're emerging stores of value, and that's where Bitcoin is. And I honestly think that because of what we're seeing recently with the whole Blackrock situation, that's exactly the phase that we're in right now, all right? A lot of people are starting to notice, hey, this Bitcoin thing might actually work in a time where, well, the stock market might be in a little bit of a trouble because of everything that's happening in regards to recession and whatnot, right? Right now, what exactly is safe? What should you go for? and they keep on thinking about maybe Bitcoin, maybe Bitcoin. Kenneth says, Dusty, I read a Bloomberg and Wall Street Journal article yesterday, and the reason for the stock market's current dip is because 2.1 trillion in options expired yesterday at a loss. 2.1 trillion seems significantly high. Stock, but let's see it. Options stock market. Let's see exactly if I can find some news on the matter. Wait a minute. You might be right on that one. You know, let's not give this man. Actually, let's keep the honor for ourselves, guys. Look at what I found. All right. Oh, this guy was saying so. Oh, yeah. I already found that, my friend. So this guy is saying something about the stock market. No problem. I already had it. But thank you for the suggestion anyway. No. Let's see. Okay, so we're gonna need a subscription to view this. Screw Wall Street Journal. Do I need to log in or something? I don't think this is going to be very easy. So it said right here, what over $2 trillion in expiring options may mean for stocks, but I can't read. 2.1 trillion. A heavy dose of options is set to expire today, including, this is yesterday, roughly 1.4 trillion tied to the S&P, as well as 430 billion tied to single stocks, and the balance tied to other indices, according to Goldman Sachs. All right, let's actually extend our search then. And again, guys, I'm a little bit sorry for some lag that I'm noticing as well. I'm going to try fix it later on, but it might have to do with my bitrate or something. I don't know exactly. Let me try to figure out exactly what this one is all about, though. Goldman Sachs options 2 trillion. See what I can find about the situation. Okay, we have a Bloomberg article, and we have Blockworks over on Twitter. Okay, so we have a couple of different things we can take a look at. Blockworks over on Twitter put this up. Breaking Goldman Sachs 2.1. This is not even from right now. This has nothing to do with this. And this is from the 18th of August. Let me quickly check it out. So let me close this one. Who said that? That deserves a big little W from you, my friend. Kenneth, big W for you, my friend. You're a genius for finding this. Interesting how I did not notice this upon my research. I guess I have a little pea brain, you know, a little tiny, teeny, weeny pea. I don't know. Yeah, pea. Uh-oh. Stream is really starting to lag, huh? Let me see if I can change something for you guys. If I turn the bitrate down lower, would that help? Or what do I change? Oh no, all my settings are already cut in stone, of course, because I'm already streaming. Not sure if I can fix anything now that we're streaming already. And again, I'm not even sure what I should change. Because it has to do with the internet then, I guess. But it's very annoying because I'm seeing you guys just cut out every time. Somebody says it's fine, but I can see the amount of viewers just drops by 70 or 80 every single time there's a little lag spike. So, aren't you guys lagging? I can see a big big drop. A lot of people left. Usually that happens when the stream starts to giggle a little bit. And I can see my screen also get that little circle sometimes. Whatever. It is what it is. So, a $2 trillion stock options deadline is make or break moment for bulls. Options trading scene having lifted stocks, capping volatility. Brace for price swings in both directions, no rumor strategist. With August shaping up to be the calmest month this year for the U.S. stocks, traders are closely watching Friday's $2 trillion options expiry for hints whether the tranquility will last. At issue is the belief that derivatives markets have somehow played a key role in surpassing volatility, thereby compelling rule-based quant traders to buy shares and in turn luring a broader group of investors back into the markets in order to chase gains. This is basically a bull trap. After likely spurring an equity rebound during the summer lull, some strategists warn that this benign activity in the options market, typically fueled by Wall Street dealers, could disappear at a critical time. Now, from central bankers' annual retreat in Jackson Hole, Wyoming, to pending data on inflation and employment, and the Federal Reserve's policy announcement. When is that one? We'll check that out in just a second. The next few weeks are full of potential catalysts for market chaos. There are some technical reasons why, as we go into the expiration this Friday, volatility could stay dampened, and you could continue to see the market relatively supported, which was not the case. Amy Wu Silverman, an equity derivative strategist at RBC Capital Markets, said on Bloomberg TV, Quote, as people return back from vacation with eyes on the ball, you can see what the real volumes are telling you about the volatility pickup, end quote. About $2 trillion of options are set to expire, obliging holders to either roll over existing positions or start new ones. The monthly event includes 975 billion of S&P 500 linked contracts and 430 billion of derivatives across single stocks scheduled to run out, according to estimates by Goldman Sachs Group Inc. strategist Rocky Fishman. We can see right here, stocks have restored roughly $7 trillion in value since mid-June, as what began a short squeeze cascaded into a buying spree by those who exited equities during the first half carnage, amid fears that the Fed's aggressive inflation-fighting campaign could tip the economy into a recession. Shares have since recovered as data showed a robust labor market and cooler than expected inflation. Along the way, traders flocked to call options to catch up with the surprising rebound. Imbalancing their bucks, option dealers were stuck in long gamma positions that left them needing to go against the prevailing equity trend to maintain a neutral market exposure. Thanks to in part to the process, P's returned to the market, and the CBOE Volatility Index, or VIX, has averaged 21 in August, and on course for its lowest level since November. All right, VIX falls as stock march higher. Broadly speaking, bullish contracts have been changing hands faster than bearish ones. CBOE equity put-call ratios, 10-day average hovered nearly a 4-month low, a sign of growing interest in upside wagers, which is interesting in comparison to what happened, right? If we take a look, things have drastically fallen throughout the anticipation of Friday, which is interesting when the entire article is so excited and so bullish. Everyone is on the call side of the boat, which again is very peculiar when we're literally seeing the opposite happen in hindsight, right? So why exactly did that happen then? It's a good question to ask. He says potential for the market to move in either direction. Charlie McElligott, a cross-asset strategist at Nomura Securities International, expects Friday's option expiry to open the door for bigger price swings after the buffer from dealer hedging is reduced. Should inflation come in hotter than expected and Fed policy makers ratchet up their hawkish rhetoric, that triggered turmoil across assets, he says. On the other hand, barring any negative macro shocks, money managers are under pressure to keep chasing the rally, given their relatively low equity positioning. My daily communication with clients continues to hate this rally, who remain wrong-sided and a source of buyer higher. He wrote in a note Wednesday. Okay. Interesting. So that was all in anticipation of Friday, though, right? And today, I guess, we're already moving towards the upside, potentially because the stock market is closed. And so since there's the option, maybe because the options expiry was Friday, and so from now forward, we can actually, as it is Saturday right now, continue on to go back on the bullish side. The way we're looking at the Bitcoin chart, right, that looks to be exactly what happened here, though. The moment, literally, that Saturday sprung up, things start to get bullish again. So we're already up about $400 from the lowest point, which is pretty peculiar. If you guys are taking a look at this, it's pretty peculiar that it happened this way. It's very interesting to watch. Now, to continue on with the story for a little bit, though, because I had some more. I'm noticing the stream is a little bit laggy. I'm going to try to fix that later on. Not sure how to fix it right now. So it is what it is. Sorry for that, guys. There was a little bit about the SEC, and I talked about this before. Interested in having the SEC speak to your audience? Our Chicago office can present on many topics such as cryptocurrency and digital investments, in-person event this past April. We have presentations for seniors, students, teachers, and more. Email us at the Chicago SEC, yada, yada, yada. So the reason that this is rather interesting is like John Deaton says right here. Are you willing to offer one or more of your speakers to engage in a civil debate over an Howey analysis applied to crypto? Crypto Law US will sponsor it. I mean, this is your specialty area, so it should be a cakewalk for any of your expert enforcement lawyers. I mean, didn't your office file a Dragon Chain complaint? Shouldn't require any preparation whatsoever. And also JF says, is this like a troll tweet? How can y'all represent on something when one of the commissioners can't speak on anything? That was this, oh. We good? Okay, let's quickly check this out. I'm going to have to mute my mic, and we'll watch this together.
Chairman Gensler, unlike his colleagues, Jay Clayton and Bill Hinman, has not spoken about Ethereum, even though Bill Hinman and Jay Clayton have talked about Ethereum, and he just primarily talks about Bitcoin. Are you folks at the SEC going to be reviewing Ethereum's ICO? Because folks are wondering, is there a double standard here? Why did Ethereum kind of get a clearance, so to speak, and the other projects are getting, have targets on their backs?
So Tony, you and I both read Twitter, and so I can't talk about potential investigations, rumors of investigations, particular tokens, particular companies. I just can't talk about any of those kinds of things.
So what can you do with this information? Absolutely nothing. Because she basically just says, if you have any questions, we're not going to tell you, right? He's asking a really proper question. Did Ethereum get preferential treatment, yes or no? She could have easily said, no, obviously not. No, we treat every single crypto equally, and we look at every single one of them individually. She didn't say that. She says we can't comment on that, which is kind of strange. However, it's the SEC, so my standard of things is pretty low. However, then to say, like, hey, you want to open a discussion? Let's go. It's not really true then, is it? Because what questions exactly can you ask? In regards to topics of cryptocurrencies and digital investments, if nothing can be spoken about, if nothing can be discussed, what exactly is this type of event going to be about? Not exactly sure. Even John says crypto law will sponsor it. It's not as if there's a funds issue. There's no issue whatsoever. The whole question is, why exactly do they want to engage in debate if they don't want to engage in debate? It's just for scene, right? They're kind of making it like this. They're putting up the charade, they're putting up this idea by staying so open on Twitter, trying to open up these communications by saying, hey, we're open to anything, let's discuss. But then when you actually want to discuss something like, oh, no, that's too spicy for me, can't do that. It's like, what? What exactly was your purpose then? What exactly was the idea behind all of this? You didn't want to discuss, but you kind of do? What? It was so strange. And I keep coming back to this, keep giving praise to John Deaton for keeping his back so straight and trying to, I guess, get something out of it, because it makes absolutely no sense to me, at least. But it is what it is. Now, a little bit more, right? So Coinbase is up, as I said earlier. It was pretty logical, if you ask me. Massachusetts was going to work out. Peace be with y'all. Have a good workout, my friend. Got the workout shirt already ready to go for later on. Coinbase shares are up 60% in the last month. Should you buy now? Obviously, no. Based upon the idea that the stock market is moving down and BlackRock got in, which is what pumped Coinbase. It's quite logical to say this, though. If the stock market recovers, if Bitcoin recovers, Coinbase shares will do good. So from that perspective, well, yeah, it's just the same as buying Bitcoin. I'm not sure why you would diversify into Coinbase when a major announcement was just made. Maybe in anticipation of another major asset manager helping or working with Coinbase or so. But that doesn't really seem like a very logical thing. All right. Let's see here. Binance US obtains money transmitter license in Nevada. Another piece of news that I think is rather interesting. I just saw this, but I'm always thinking, So even in Nevada right now, they're getting a money transmitter license. What exactly, at the end of the day, does this mean? Because at the end of the day, you can get any single license. But if, for example, you handled as a company, like Binance US, for example, in XRP at some point in the past, you might be completely shut down. I'm thinking, what if the Sherman theory works, where he basically said any company that ever traded XRP in the US, we should go after them. If that really continues on in the way in which he envisioned, what would that mean exactly for companies, even though they got all the proper licensing? Because if they handled insecurities, for example, and the SEC is going to really up their game with security lawsuits in the next couple of months, I honestly think at least 10 more lawsuits will be filed over the next 3 months or so, but we'll see how it goes. It's just my honest expectation. How would that look in another couple of months when they go after so many cryptos? Right now, the SEC has gone after at least 11 that I can think of. You have XRP, you have the 9 in the Coinbase Insider Trading Report, you have the Dragon Chain, which is 11. But there's also a library and a couple of others that I can kind of think of already. So let's say 15 in total. What if that turns up to about 40 over the next couple of months? What about the exchanges? Because in the whole 9 crypto problem, they also went after a couple of exchanges with subpoenas and whatnot, saying, well, but you handled in these currencies and they are securities. What's going to happen, even though they got all the proper licensing? And that, again, is a debate that the SEC should be having, because Well, they're the ones who keep claiming that these things are securities, yet when these bigger fish like Binance US come up to the SEC to ask, hey, is this fine? They're not willing to give comments. Like, for example, we saw in that little interview. When asked about it, they don't like to respond to it. So then how can anybody know what's good and what's bad? If you got all the licensing that you can get, how exactly can you go on? How can you get further, if you guys get my drift? It's really strange to me in the way that that works. But I guess, let's move on, all right? Side piece. The Central Bank of Colombia is... Oh, by the way, actually, before we move on, if you guys have not checked out my $10,000 giveaway just quite yet, let me say it right here. If you haven't joined, join it. There's absolutely nothing keeping you from joining it. It's pretty freaking simple, and it's absolutely free. All you have to do is just follow me on YouTube or Twitter or whatever, and just check this out. It's as simple as that. I can't make it simpler than that. So just check it out. It is worth it. It is cool. All right? Check it out. That's all I'm saying. Check it out. Let's move on. The Central Bank of Colombia is studying the creation of a digital currency. Now, I kind of want to go into this route of explaining Ripple's side and the XLM side with digital currencies now that can kind of come into the entire picture. But let's just say it like this, combining it with my earlier article or my earlier analytics regarding Ethereum. The space is growing. Regardless of what you're seeing, regardless of the volatility that you're witnessing, the space is ever growing. Every single day, there's another step taken by some company somewhere out there. Every single day, there's another step taken by some government out there in the blockchain realm. They're expanding. And they're all noticing, hey, this is some tech that we'd like to be part of. Now, over in the US, they're being very hesitant. Right now, they're moving more towards the FedNow program, so they're making some steps. But they're very hesitant. In a lot of other countries around the world, though, they're really studying it a lot more severely. Don't forget that in the US, they're studying it, but they're just a lot more hesitant to make any critical steps. In other countries of the world, though, they're not. You know, a studying basically means, hey, we're really looking to get this done because we know it will be better for the people or for our control or whatnot. Let's do this. The US is one of the only places which is like, we know that this exists. We know we have the best people in the world to make this a reality, but let's kind of not because we're kind of scared. It's such a stupid system. The US is not the best for what they've done. In this regard, at least, right? I'm seeing DJ Flex say Congress needs to stop stalling with regulations. Slow. Yeah, they are slow indeed, and it's for a good reason, I think. They are slow, I think, because they just want to make sure they have the control over everything. And I honestly think they just might think about a China approach, but they just want to ban everything. Because you got to think about it. With crypto, the reason they went after Tornado Cash is because you are free to do anything. And specifically when you can mix all your money and they can't control you whatsoever, they have no more power over you, the way I'm thinking about it. So, logically, right? If then, and just you guys think with me here, if then there's a currency, or actually a lot of them, which are helping the payment realm, which takes away some control of this government or takes away control of the central bank, why would you be so much in a hurry to let people adopt this? Why would you be in such a hurry to let people make more money on this? What's the benefit for you, right? You want to make sure that it's the most taxable amount possible for new technology, because why not? What do you have to lose? But then you also want to make sure that you have the most amount of money, power possible at any one point. So, my personal opinion on the matter is a slippery slope. From their side, I understand why they're being very careful and very cautious with getting or giving this stuff main adoption. But at the end of the day, is it a douchey move? Certainly. It's not something that I really appreciate, but it's the way that they've chosen to do it. And yeah, it's kind of logical from their side as well. If I had all the power and some new company were to come in to try and give power to the people back, you'd definitely be like, ooh, damn, let me be slow on this one. Let me think about this one on how to actually retain the most amount of power possible. So from their side, it is also not that crazy. Yeah, but that's my thoughts on the matter. So yeah, since we're already streaming for about 45 minutes, and again, some guys are saying it's not lagging too much, but I'm noticing 2.5% dropped, and the viewers are like this because every single time it cuts out. I'm going to cut this stream short right here. It's been 45 minutes though, so it's not really that short. I might do another stream later today. Then about, most likely either about XLM or about my top 5 altcoins. We'll see. I might just make a video about it though. It depends on how much time I have free. Either I'll make the video and post it a little bit later, or I'll just do the stream at that exact time. We shall see. You might not get a notification for it though, so make sure you follow me over on Twitter and just refresh the channel every couple of hours for fun. You know, I try to do as many streams as possible. I'll try to do as many streams as possible to give you guys the most important news at the most juicy time. And that was it for today's little update, all right? So make sure you subscribe for more of these daily crypto videos, I guess, daily crypto live streams. I'm going to try to do it every single day for the next week at least. We'll see, though, how it goes. And yeah, thank you guys all so much for stopping by, saying hi. And I'll see you guys again in another crypto video later today. Adios, guys.